Target stock, ticker symbol TGT. This stock is up 23% on the year-to-date chart, outperforming the SP500 big time. And we see a big spike on the 5th of March, which is related to the earnings. Target beat on both the EPS and revenue, and especially the EPS was what surprised most people. And what people like the most about Target is of course the dividend, with a dividend yield of 2.5% and 55 years of dividend increases. If we look at the past 5 years, we see that Target outperformed the SP500 big time for a longer period of time. However, most recently it looks very interesting. So could this be the perfect time to buy Target stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Target do? Target serves as the nation's 6th largest retailer, with its strategy focused on delivering an in-store shopping experience and a wide product assortment of trendy apparel, home goods and household essentials at competitive prices. Looking at the earnings results, we see that Target reported 31.9 billion in sales, up 1.7% year over year. Cost of sales went down 2.3%, looking pretty interesting. However, the full year results are still down compared to last year. EPS was reported at $2.99 and dividends at 1.10. So we see that dividends are covered pretty easily. EPS is up 57% year over year, looking really good to me. However, looking at comparable sales, I get a bit worried. We see minus 4.4% and minus 4.5%. Even digital sales decreased 0.7%. For Target, it is really easy to generate more sales by opening new stores, but you want the comparable stores to grow as well. Again, EPS looking really good. The thing that I do like is the fact that they are getting some momentum with traffic that improves and the margin that improved big time. Another great thing is that they have 10 own brands that were introduced or expanded. This definitely will have a positive effect on the margin. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. Target is a 81 billion market cap company. PE ratio is at 19.6, indicating they are around their fair valuation. Later in this video I will show you my 3 price targets for Target stock, so make sure to watch until the end. Revenue is at 107 billion, and in this graph we see that revenue went up in the long run. We see the impact that lockdown periods had. Most recently they are struggling a little bit with the revenue growth. Margins are going up and down a bit, and after seeing the bottom late 2022, margins started to recover again. EPS is pretty much the same story as the margins and revenue. Nothing really special to add here. Analysis expect that EPS will skyrocket in 2024 with 50% growth. After that, they expect low to high single-digit growth in the following years. For the revenue, analysis expect a bit more steadier pattern, with an average of 4% growth starting from 2026. For the upcoming 2 years, analysis expect revenue to stay more or less flat. Return on assets is sitting at 7.6%, which is a decent number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at roughly 12.5%, which is a great number. It is slightly higher than the 5-year average, which is very nice. Current ratio is at 0.91, which is a great number. It also is pretty steady historically. So this looks good to me. Right now, Target has almost 20 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Target has 3.8 billion in total cash, so they can't pay down a big chunk of their debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow went up in the long run. However, it is not always steady and consistent. Shares outstanding are decreasing in the long run, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.5%, which is a great number. Annual payout is at $4.4 and payout ratio is at 49%. I prefer 50% or lower, so right now they have 51% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 11.5%, which is looking really good. And on top of that, they increased the dividends for 55 years in a row, which is really impressive. If you take a look at these numbers, the dividends paid since 2012, you see that Target did increase the dividends at a pretty high rate. To me, this looks really good. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio is going up and down a lot over the years, but in general it is looking pretty good to me. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase slowly from here. Overall these dividends look really good to me, but how about the historical returns? I decided to compare Target stock with the overall market, in this case the S&P 500. Next to that I added Dollar General and Walmart. On the 5-year chart we see that Target beat everyone in this list by a big margin. In total Target returned 150% including dividends. The S&P 500 and Walmart are pretty close to the 100%, and Dollar General is lagging behind big time. On the 1-year chart things look pretty interesting with almost 10% return for Target, while the S&P 500 is at 28% return. Walmart also did a decent job with 21%. On the 6-month chart it is Dollar General that is soaring with almost 50% return. But take a look at Target, 67% return, beating everyone in this list again. On the 1-month chart it is again Target that beat everyone in the list. Bottom line, Target was the winner in the long run and in the short run. So could this be the perfect time to buy Target stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2, 3 and 4%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 3, 4 and 5%. For the free cash flow margin I'm putting in the same numbers. For the PE ratio I'm putting in 18, 19 and 20. For the price to free cash flow I'm putting in the same numbers. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now Target stock is around $175. I hit analyze and we see a lot of red numbers. We have a low price target of $86. We have a mid price target of $128 and we have a high price target of $177. To me, the high price target is the most justified here, telling me that this stock is around their fair valuation. Which price target do you think is most justified? Let me know in the comments down below. My final conclusion on Target is that I do like the business. It is a steady and consistent company that has been performing for decades. However, the growth with these companies is typically really low. So you need a lot of improvements in the margins and the cash flow, for example. And that is exactly where for me the problem starts with Target. The thing that I do like is that we are seeing some improvements in the margins. So that's the positive part here. From a dividend point of view, things look amazing. You got 55 years of dividend increases and a decent 2.5% dividend yield. They also keep on growing their dividend at a high pace. From a value point of view, I think Target is kinda fairly valued right now. Does this mean you shouldn't buy or sell? No, these price targets are based on what I see and think. For now I'm skipping this stock and keep analyzing them from time to time. So remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.